Holy F. We crash landed on support, and now we have a reverse stock market crash. Are the bears trapped? Because we have a record weekly close and we have a record monthly close, which means we've never been more bullish on the monthly and weekly candle closes than we are right now. We can see stocks are largely higher on Friday. And Black Friday sales, they came in pretty good. There is resilience. The US consumer is pretty strong. And JP Morgan thinks we could go to 8,000 into the end of next year. I'm going to give you a quick preview on what I think is going to happen this year. My notes for 2024 are right here. Here are the receipts. I said, I think we're going to go to 690 as long as the pattern holds. Where are we right now? Hey, we're at 680, 683 going into the last calendar month of the year. So this was 2024. This was 2025. This was 2024. And we're likely looking for a lot of the same stuff right now. Not going to waste your time. Here are the ideas we talked about earlier in the week. Here's DJT. We're currently up by 9% with a 21% position, and we have an open gain of 1.7% on the portfolio. The trim means we can't lose on the position. If we look here to ELF or ELF, we can see that we are roughly 7% on the position, up by roughly 7%. Open gain of 0.4%. We got a trim, so it's free as well. And our risk reward is still 5.0. Earlier in the week, we talked about how those are due for upgrades, which means that they might actually go even higher from here. So if you want to find out more, I would encourage you to come to the morning stream at 8:30 a.m. on Monday. But first, let's go through and have a look at these stocks. So let's jump straight in here. So I got a lot of notes to go through right now, so I'll try to do it as easily and quickly as I can. Let's go here. So looking to this week in terms of earnings, there's not really that many that matter. There's a couple, but nothing I'm really paying attention to. This is what I care about. On Monday at 8 p.m., we're going to hear from Jerome Powell, and he's going to be speaking about economic policy. So he's going to be getting questions, and this might move the market. So in terms of what is market moving, I'm watching for J, right? Jerome Powell. We got CPI out of Europe. Don't really care about that. We got ISM. We got initial jobless claims. And then on Friday, we got core PCE. If it comes in line with the previous number, like I just told you, the market is now closed at a record monthly close and a record weekly close. So the market shook it off and continued to go higher. So I don't know why that would be any different right now. If we look to the Fear and Greed Index, we can see that we're on the cusp of breaking out, or we're about to get trapped. It's not that complicated. We can see a downtrend right here. We got the lows, we got the highs. And if we manage to get above roughly 25, it could lead to a breakout. Have a look right here. High, lower, high, lower, high. Once we break out and get back out of extreme fear, led to a reversal. Oh, one more point and we're there. Yes, we are. Can the bulls do it? Because right now there's quite a bit of bear fuel. And if you were wondering whether the registrations are open to our website, yes, they are. You can go to thealgo.com between now and the end of the year. If we look here, the shorts just continue to pile in. So last week they were at 144,000 contract short, and now they're at 165. If we have a look here, I talked about this before. Low, lowest, back to net long. Low, lowest, back to net long. Low, lower, lowest. Are they about to go net long? Well, if they do, it's going to work out really well for these bulls. But we have to keep in mind as well as that stocks are a little bit rich right now. If we look here to the current PE, we see that there's a lot of red on the screen here. So over 30 means expensive. So today, stocks are expensive, but tomorrow they get less expensive. The less red it is and closer to green, the better. All right, looking forward to our key levels for this week. Here they are. Pause if you need to. Here are the key levels in another screenshot. And then here are the key technicals for this week. I call those the dots. So here's your dots. Just like Jerome Powell's got his dots, I think I'm so special that I need dots too. I'm just joking. These are traffic lights. So as you're going to note here, there's green, green, cautiously green, and then caution. Okay, pretty simple. What about the key dates? Here we go. Monday, like I told you, Jerome Powell speaks. That's on Monday at 8 p.m. And then on Friday at 10 a.m., we got core PCE. Normally, these numbers come out pre-market at 8:30, but they're coming out during the session today. If you want to see all these notes, I think it's a second link in the description. You should see everything here for free, including those ideas we went through, including all my best practices, and all the notes I'm going through right now. They're all right here, 100% free. All right, if now we push forward here, let's see what else the market is telling us. So those were the key notes for this week. I have a little bit of an update here. So this is a warning pattern. I'm going to go through this very briefly. I'm going to present a potential bear scenario, and then I'm going to go through and present a potential bull scenario. So here is the monthly chart for SPY, which shows us that as of right now, we're probably going to go higher. The bulls have the edge because 1 out of 4 is not a passing grade. That's why there's only caution. It was a failed breakdown. If we look to the bearish pattern first, here is what's curious. Let me actually go here to my notes. Let me go to the thread. Let me click on here, see if I can actually see it. So here's what I want to point out. I'm pointing to a couple of things here. It's a monthly candle on VOO. And what we notice that there's this failed breakout pattern. So failed breakouts, failed breakdowns. I love those patterns. If we look here a little bit closer, we note that there's 1, 2, 3. So there's 1 red arrow, 2 red arrows, 3 red arrows. Low, lower, lowest. Low, lower, lowest. Low, lowest, low, lower, lowest. Low, lower. That's what's missing here. The lowest. So we did get the break here. Let's go back to our notes. So in 2015 to 2016, it took 15 candles from the first candle low to the last candle low. That's what I'm pointing out here. So how long did it take? 15 months in 2014. It took 25 months in 2018. So right here, we can see that it took 1, 2, 3. It took a lot longer. It took over 2 years, 25 months. In 2022, it all happened within the year. 1, 2, 3. That took 9 months. So far, in 2024, we're tracking 19 months. So if history is going to repeat itself, we better pay attention here because those yellow boxes are failed breakouts. The red downtrend shows us 3 waves of selling. I would also note that on the third test, it's a clean touch of the 50 MA. So what does that mean? On the third touch, we test the 50 MA. On the third touch, we test the 50 MA. On the third touch, we test the 50 MA. On the third touch, it's, again, the odds are that we're going to slam down and test that 50 MA. If you could please do me a huge favor and consider smashing the thumbs up, or subscribing to the channel, I would greatly, greatly appreciate that. Thank you ahead of time. Okay, so now we understand all that. So what do we do with all this data? Well, nothing. We just make a plan. Oh, sorry, one more note here too. So we can see there's actually a volume climax on the third candle. So the price is king, but volume does confirm too. High, higher, highest. So when we flush on the third lowest low, we get the climax in volume. 1, 2, 3. Look at all that volume there. Oh my goodness. And so far here, what do we have? We got 1, 2. Is a third one going to track here? Because if it does, we have to just be prepared for this. So what do? We make a plan. And I'll show you exactly what that means. Again, this is in the description. It is 100% free. You know what, Justin? Maybe others need a plan. I don't. Well, you're reading, so apparently you do. Keep reading. Pause right now if you need to. Got it? Cool. Here's the other thing you need to do. In your existing account, pause right now if you need to too, or go to the second link. It is 100% free. No paywall, nothing to do. I just want to help you because these are the notes that I would want to see if I was in the audience. I think trust takes time to build. And what I want to do is give you the notes I use to build my own personal plan for the week. All right, so if we look here now, we watch for a failed breakout. We don't have one right now. A failed breakout would happen if we go to a higher high and then fall back below. That's why it's so relevant this month and this week, because we're closing at or near the high of a candle. It implies we're going to go higher. Then we watch for a lower low and closing below the low, basically looking for our bear recipe. Again, going back to here, we want a nice bullish bearish cake. Well, we got here. I showed you earlier. We printed a lower low on the monthly. That means caution. We didn't close below, though. It actually snapped all the way back and went green on the month. But now, because we did number 1, we can leapfrog to number 3. If we print another lower low and close below it, that's full bear. I'm not going to argue with the chart. It's not my job to do that. For us to print a monthly lower low, we would have to decline by 5%. We would have to go all the way back down to 650 and lose it. Here's a reason why it matters. Last week, we talked about how we had that quarterly candle. If I go back in time here, our quarterly candle, we talked about this. So we know that if we lose these key areas, where's my charts here? We lose these key areas. Well, there's potential we get slammed down to support. This is from last weekend, so I'm not going to go through this in too much detail. This is a very high time frame chart. If now we look forward here to our 1 month pattern, let's go back to my notes here. We watch for the lower low. Reminder, The elevator down can sometimes happen in 1 to 3 candles. So that means that hindsight is 2020, but that isn't helpful. So we need to be legitimately prepared for the worst case scenario in a drop of this size. I'm not trying to scare you. I'm trying to tell you that it happened the last 1, 2, 3 times. It has a 100% hit ratio. And so far, we're tracking 2 out of 3. 1 nasty cut, 2 nasty cuts. The third nasty cut implies we're going to slam down to the 50 MA and print a lower low. If that happens, it's not going to be pretty. However, the longer we rally before the crash, the higher the 50 MA can curl. However, the lowest low is still implying we're going to take out the April lows. So as we go into the end of the year, that is particularly important. Now, let me show you some Fibonacci magic, because if we go back here to 2025, a Fibonacci basically just means that we're going from the 100. I think I have a note down at the bottom here. I do. So from 1 to 0, that shows the high to the low. And then we get these Fibonacci retracements, 78%, 61%. That's the golden number. 50, 38, 23. But we also get extensions. If you look here, I've been talking a lot about 690. I mentioned it in my notes going into this year as well. So there we go, 694. That's the 161 for the 2025 crash. If we go back here to 2022, you can see where the horizontal ray starts from. It's from right here. There's nothing before this line, which means that if I zoom out here, this is where it starts. It's where it's flush, where it lines up. So 100 is 479.98. 0 is 348.11. Then we get an extension number here, 561, and then we get 693. What that basically means is that we're tracking the exact same number. If now we go back here to 2020, what it shows us is we hit all the numbers. We had the 161, the 261, the 361, and then the 423. So the 423 gives us a new target, and this is the last one here. It's at 730. So earlier, I showed you that JP Morgan's calling for a rally all the way to 8,000 or 800 on SPY. Can we make it there, Justin? Can we do it? Well, look, if we take the move from 2025 and we look to the 261, oh my goodness, 825. There we go. So the 2020 crash happened again. This is called an expansionary signal. So 161, 261, 361, 423. Okay. So if you're confused, a Fibonacci retracement is clawing back the decline. Like right here, we're clawing back the decline. It dances between the numbers. Then we look for upside targets. Pause right now if you need to. There's 161, 261, 361, and 423. That's algo or robot math. When multiple extensions align, that means there's convergence on levels. So riddle me this. If you were looking at the 2025 crash, or you were looking at the 2022 crash, you got roughly the same number, 694. That's where my number came from for my 2024 target. So here's what's really curious. After getting pretty close, you can see the number right there. 161 is at 693. I think that number is just slightly off. What happened? Well, we backed off. We got a dip. We got some guacamole. And the reason why is because we dropped by 5%. Oh my God, a 5% drop. Yes, we dropped by 5%. Okay, so if now we understand that, I talked about the bearish scenario. Now I'm laying out a bullish scenario. 825. Whoa. If we go to 2024 and we extrapolate this, the 261, look right here, 261, 825. If we go back to the 2022 crash, the 361 is 825. Again, convergence, it's math. So I'm a bit of a nerd. Maybe you are too. This is called the golden ratio. That's how we can make it to 8,000 or 800 on SPY. Could it happen? It could. Here's your preview for 2026. So it's pretty simple. We are on track with only 1 month left to close at or near the high of the candle. So we're going to apply the exact same logic this year that we did last year. Failed breakouts are bad. So going into this year, when we fell back below 610, that was our warning sign. But we didn't fall below 466. This is from 2024. Okay. So we're on track to close at or near the highs, which means that we are implying continuation. Being over this year's high next year is bullish. It's going to be very similar to the note I showed you at the very beginning of the show. Okay, now let's go here to our notes for the current month. So as I told you, there is caution on the 1 month chart. And the reason why is pretty simple. If we go back here to our bearish recipe, higher lows were sufficient, but we didn't hold the higher low. So we're not bearish or cautiously bearish yet. We just have caution. Now, if we read the note, it's pretty simple here. So this is a warning. It is not confirmation. We have a record close. So how is that bearish? It's not. The bulls, we closed higher by, come on, by 19 cents. Sorry, by $1.33. So basically into the close, if you look at the last 10 minutes or tree 50, that's where they went for it. We went from 682 all the way up to 683.39. That's what saved the chart. It was basically us rallying into the last 10 minutes or tree 50. So if we're now closing at or near the high of a candle, what does that imply? It implies continuation or a higher high. If it holds, then we are halfway to a bull market on the 1 month chart. And the reason why is exactly what I just showed you. If we want to go from being cautious on the 1 month, meaning a little bit bearish, what do we need to do to get back to being bullish? Well, we got to print a higher high and we got to close above it. What I'm basically telling you here is that we're closing at or near the high of a candle. The odds are quite high. We're going to print a higher high. That's why I say we close at the high. It implies continuation. The question is, do we hold? And remember, I just showed you that failed breakout pattern. So if it does not hold, this is what could happen. Again, could. I don't want this to happen, by the way. I'm just prepared, as I showed you before, in making my plan. So if it holds, we have to wait all the way until the end of the year, which means that 2026 note is particularly helpful right now. If we fall back below 650, that implies we're likely going for the really big drop. That's it. That's why I have one level on my chart, 650. That's all that matters for me. If we're in the monthly higher high and over the high, excellent. Does it hold? If it does, again, into end of January, now we're back to being fully bullish. If we go here to our 1 month, our 1 week chart, which I showed you very early in the show, it's also a record weekly close. I was making these notes a little bit late. Let's go here, record weekly close. When in doubt, be patient, which is what I've kept saying before. I would argue we're range bound in the pink lines or what? Going sideways. So we're near the top end of the sideways pattern. This does look like capitulation though. It does look like a volume climax. If the low holds, right? That's the really big question. If the low holds, excuse me. So when I showed you at the very beginning of the show, if I go back here to my, what chart am I on right now? The 1 month? I think I'm on the one day here. Let's go to the 1 week. So when at the very beginning of the show, I made a joke, right? Stocks crashed and they crashed right down to here. So what is this number? It's 650. That's the monthly low we just printed. It's the same number I pointed to here, 650. So we crash landed roughly 5%, and then we just did it. Nike swoosh all the way back up. Whoa. That's right. These bulls are showing up. Review the other patterns above, and it provides a bullish and bearish scenario. If we have a plan, either one should be palatable. Good luck to all into ho, 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 or the Santa Claus rally. Talked about the notes. We got those all right here. So again, pause right now if you need to. Those are the key areas. So peak to trough was just over 5%, or we got a little bit of taco time with some guacamole on top. We could still slam down to 613. Remember, 650 has to be lost before we go down to 613. Go back and watch last weekend's video if you want to see more on that as well. All right, pushing forward here. We talked about the 1 month. We talked about the 1 week. I think we're finished on those notes. If now we continue here, what else do I want to show you? Because I'm thinking about what could be most helpful here. All right. So since I mentioned that our registration is now open, if you want to find out exactly what you could get if you go join us, I know we got like roughly 300 people on our wait list, so people are probably curious. If you want to go to the website, great. If not, I'll give you a quick preview for my real account. I'm not going to make you go anywhere. It's right here. Just pause if you need to. Here's everything I'm doing. So I prefer to coast here and respect the plan into the end of the month. I'm very happy with my year-to-date performance, over 20%. I am rotating a little bit, though. So I'm exiting Tilray at a 92% gain for the exit. I'm trimming some Playboy. You can see it right here. I'm trimming some Playboy. So orange means trim. Green means bid. So what I'm doing is I'm trimming 1, 2, 3 names. You can see them right here. Trimming Playboy, trimming EWZ, and trimming TE for 166. This will give me roughly 1% back on my account. I'm going to rotate those to 2 new names. So I'm going to be buying Stellantis for 0.5% of my account, and I'm going to be buying FDS for 0.5% of my account. That's why they're right here in green. So that's basically it. I have a ton of cash right now, or 88% of my account. And here's the update from Friday so you can see what happened. So here's what it looked like going into this week ahead. I said, watch these names because they're about to get fired if they go a lot lower. So which one went lower? It was just Tilray. Telray is a stock that just did not perform, so I had to let it go. It treated me good, but I think these two names have a lot more upside opportunity. So again, if you want to find out more, come hang out with me at 8:30 a.m. or ask a question. I'll be happy to answer it. All right, so in terms of what else we really want to go through, that's pretty much it. Let's have a look here and zoom out. Let's look and see what else is really notable right now. We go here to the NASDAQ. The only other chart that I want to show you is that it's this one here. So yes, we're 100% extended. We are going really high. We're booming. But as long as we continue going higher and higher and higher, I would argue that we did kind of crash land onto short-term support if we connect our all-time highs. And this is an area that is not giving me particular enthusiasm, but I'm not going to argue with the chart. Our accounts have done really, really well. And what I mean by really, really well, again, a little bit of a low-key flex here is that here's our performance so far for this year. So again, I'm testing a lot of things right now. So I'm not going to pretend like this is a real account right now. This is basically me just getting prepared for 2026. Here's my account. This is the algo.com. So if I go to here, I can go into my system. You can see every order that I make. I'm not trying to hide or pretend like anything here is fake. So you can see all the trades that I made here, every single one, every trade that I've made. There's a timestamp. There's the exact order. It should show everything that is on here. As of right now, in my open positions, I'm up by 27%. That does not include my realized positions. So if I go back to here, I can go all the way back down to the bottom. Justin's account is up by 13.2% unrealized. So if I go to here and I click on Justin, we can see that 13% right there. However, on the algo account, which I joked about before when I said I was wrong, well, the algo is up by twice as much, 26.6%. It is crushing it. So we still have a couple of small bugs, but we're making excellent progress. I'm going to read you a note now, too, just because I don't want to pretend like I'm better than everyone else. Here's my count going into December 1st. Here's what I said. Note the above regarding performance. If it was me doing this for reals, below is likely what would be in my portfolio. I prefer not to cherry pick because these results are not going to count. We're going to be resetting the account again going back into January 1st. So I close this account out, and right now, this is what I would currently own. Again, pause right now if you want to. ELF, I talked about that. DJT, I talked about that. Donut, this would go to a monthly alert. Boeing's done pretty well. And then Dexcom and FDS. Those are all the stocks that I would own if I was not clicking buy on every single order. What I'm trying to show you, though, is that if you do or don't have a recipe for success, this is what happened. Only going back to the 17th. It's been like 2 weeks, and the gains have been incredible. So we went down briefly, and then down more, got a bounce, went down more, and then we went all the way up. Here's what's really important. If you remember from a few videos ago, I said that the SPY one-day alert is what I'm watching here. Well, we got our entry and we got our exit. Our exit was at 682.5. Our target's been hit. So I use that as our window of opportunity to go long on stocks. It's only been about 1 week. And if we go here to our trade alerts, these are for a window of opportunity for roughly 3 weeks. So to tie it all together, remember, SPY has 500 stocks inside of it. We called the bottom. Our algo called it. I didn't believe it. It's just because I didn't like the risk reward. I much preferred the ideas that I just showed you. So according to our system, we hit our target, which means we're out of that trade now. But we could have up to 2 more weeks of upside opportunity. That's halfway to the end of the year. That's half of the month of December. So it's half of these candles here. It's half of these candles here. Oh, that's like pretty bullish. Yes, it is. So if you want to find out more about all the system, what I would encourage you to do, again, if you're still watching, you're probably curious. Here's how to make a plan, regardless of whether or not you like my system. Managing risk is very, very easy if you know what to do. It's like when you drive on the road. If you know what red, yellow, green means, you don't have a question when you get up to the light. If it's red, you stop. If it's yellow, you're cautious. If it's green, you go. Well, here's an example. Whether or not you use my system, like I said, there is a way to plan for the worst case scenario. We talked about that right here. Maybe others need a plan. I don't. Well, I do. I need a plan for every idea that I buy. I always expect stocks to moon. But if I'm wrong, I have to be prepared for the worst case scenario. So if we go back to here, here's how we manage risk. Plan for the worst case scenario. And then how do we sell? Well, it's pretty easy. We look for a de-risking event, which for me means a trim. Once we trim, we let our winners run. All right, let me give you a quick live demo here right now because I think people actually quite like this, and it's a little bit hard to actually see how all these things work. So let's go here to DJT. I'll give you a quick live demo here. So if we go to DJT, if you remember again, we go all the way back in time. We looked at this idea. Here's what our screener picks up. We have over 2,000 stocks we're screening right now, 2,000 different individual stocks. So we're working 24/7 for you. Here's where the system picked up. Stock looks terrible, right? You're like, why'd you buy this garbage? You bought Donald Trump media? Yeah, I bought it. Here's what our screener picked up. However, this is what our trade translates to. So our screener picks up the stock, then we refine that down to an idea. What I'm going to show you here is that the robot is working. And when we get our levels, it's going to basically show us the risk reward in a chart. What this is going to show us is visually what should be happening to the idea. Okay, so now it's loaded. We can see here on the chart, it's pretty simple. So that screener picked up the stock, and then we refine it down to an idea. Here we go. That's where we entered. That's our average price, 10.59. It's right here. Average for DJT, 10.59. We managed to trim it. We trimmed it at 11.55. Nice. So we got our trim, and now we can note that we can let our winner run all the way back up to the key relative high. So we delete all the previous candles in our system. Again, we call that the algo. It picks up an idea. Here's the idea. So as of right now, we can let our winner run all the way to $13. That's our goal. Here's the ELF one as well. So as of right now, we can see that ELF is ran all the way to the key relative high. So we got our trim, and that's excellent because now we can't lose. However, again, our robot magic thinks that we can rally all the way up here to 127. Whoa. Yeah, that's right. So I'm showing you an idea here so you can understand how trading should be easy. I try to trade in no more than 5 minutes a day. You can see right here, there was a nasty slide. So we think we can go all the way back up to the key relative high. If you want to find out more about this, again, there's 100% free notes. They're all right here. Just click on the boards, click on the links if you want to see all those. And then otherwise, if you go to thealgo.com, like I said, registrations are open. They close on December 31st. And there's a long video here. It's almost a movie length, which explains that's me, by the way. So it explains exactly how I trade. It walks you through everything here. There's timestamps. So we have an end of day report, which I go through and explain, which I kind of showed you briefly right now. There's our, that's the intro, Justin's end of day report. Then I go through and talk about the end of day report some more. I talk about an algo cycle, which is what I just walked you through right now. So mean reversion back up to the high. Then I jump forward and show you the algo portfolio and exactly how I manage to generate ideas and buy stocks to make money. I show you the exact ideas that I like I show you right here. And these were live ideas when I recorded earlier this week. And then I also show you my 401k account and how I generate ideas. So that's it. That's the video. If you want to find out more, go to thealgo.com. If not, come hang out with me at 8:30 a.m. tomorrow. Thank you so much. I'll see you on the next one.